Good evening. Good evening, Mr. Emmanuel, and congrats on winning today's giveaway.
Thank you very much, sir. Good evening.
You're welcome for being the first person to join today's call. So you'll be getting $5 at the end of the class. Good evening, Adekunle. Good evening, Mr. Tomato 200. Good evening, Juliet. Queen Cassie, good evening, UBX. Feromi, Douglas. Mr. Isaiah, good evening. Jamie, good evening. So, yeah, welcome to day 4. Yeah, day 4, week 5 of the Sharp Academy Free Web 3 educational program. And we started this week with a topic called investing in crypto, where we discussed about the necessary steps, the necessary research the necessary details, the necessary infos you need to get before you can invest in cryptocurrency, before you can invest in Web3, the relations between Web3 investment and Web2 investment, the differences, and we touched almost everything about investment in Web3 on Monday. So aside from Monday, these are second class for the week. Although yesterday the group was open for a little discussion where we just had fun and gisted. So yeah, today we'll be going to a different topic, and I have with me here Mr. Timileyin. You should be familiar with him because he was the one that anchored that took care of this session. He was the one that taught us during this session crypto wallet. Yeah, it was one that taught us. So he's here again today, and he's going to be teaching us about trading in crypto. He's an experienced trader, I can tell. So as usual, you guys should let him be done with his teaching, then you can ask your questions. Mr. Timileyin, we can have you now, sir.
Good evening, guys. Good evening. Okay. Let's begin. We don't have more to talk about. Mr. Sharp already did the introduction, but this topic is quite wide, I would say, but I hope I'll be able to cover as much as possible, enough for you guys to at least understand when you hear crypto trading, okay, you know what they are talking about. When they say this, when they say that, you already know what they are talking about. I cannot teach you everything about crypto trading within, let's say, 2 hours. But with what I'll teach you with these 2 hours, I think you should be good to go. Yeah. So let's start. What is crypto trading? I mean, that's the first question everybody will ask. Okay, what is crypto trading, Seth? What does it mean? Okay, crypto trading is the practice of buying and selling cryptocurrencies such as Bitcoin, Ethereum, and other digital assets with the intention of making a profit. I mean, we all want to make profits. It involves exchange of one cryptocurrency for another or for fiat currency like US dollar, euros, etc. through various online platforms known as cryptocurrency exchanges. You know, we talked about cryptocurrency exchanges. So crypto trading is the process or practice of buying and selling of cryptocurrency assets on a cryptocurrency exchange. You guys are seeing how everything is aligning now. Okay, so under crypto trading, we have different types of crypto trading. We have day trading, we have swing trading, we have arbitrage, we have algorithm trading, different types of trading. So I'll just pick the ones that I think are very common or popular and give you a brief explanation of what they mean. When you say day trading, in day trading, traders buy and sell cryptocurrencies within the same day, aiming to capitalize on short-term price movements. I mean, if you are a day trader, if you buy a particular crypto asset, that means you just want to get in, and just within few hours you have already sold again. It's a quick trade. You buy and sell on that particular day. We also have swing trading. Talking about swing trading, these traders, they hold positions for several days or weeks to take advantage of medium-term price fluctuations. So day trading is for you sell it, you do everything you have to do within a day. But for swing trading, you might have to hold, you have to hold for a couple of days or for weeks. We also have a particular type of trading called hodling. I'm going to spell it HODLING, not HOLD. HODLING. That's a type of trading. This term is derived from a misspelling of hold. It refers to buying and holding onto cryptocurrencies for the long term, regardless of short-term market fluctuations. If you are a hodler, if you buy a particular cryptocurrency asset, you don't care about what will happen within 2 days or what will happen within a week. You are looking at months, you are looking at even years. If you are a hodler, yes, that's what hodling means. And there is also a type of trading called arbitrage. In this particular type of trading, arbitrage is the exploiting of the price differences of the same cryptocurrency on different exchanges or trading pairs to make a profit. What does this mean? We have different type of exchanges. We have, let's use two for a case study. Let's say we have Binance, and then we have KuCoin. These two exchanges now, and there is a particular token. Let's say this particular token is listed at $1 on Binance, but on KuCoin, this same crypto asset is listed for, let's say, $1.2 or $1.5. You see, there is a difference. So there are traders that look out for crypto assets like this, and then they might buy like $100 worth of that particular token on Binance, and then send it to their address on KuCoin and sell it at $1.5. That's profit already. That's $50 profit, just like that. So that is what arbitrage trading means. There are other type of trading like margin trading, futures and options trading. Those ones are for later. But let's move on into the key concepts in crypto trading. When you say key concept in crypto trading, these are terms that you are supposed to be familiar with. These are like our linguistics as crypto traders. Terms that you're supposed to be familiar with. So if I say, what is this? If I say this, you should understand me as a crypto trader. You get me? So in crypto trading, we have some trading terms or concepts. The first one is market order. We talked about it when we were talking about crypto wallets and exchanges. The first one is market order. Excuse me. A market order is when you place an order on an exchange at a particular price, like at the live price of a particular crypto asset. A market order is an instruction to buy or sell a cryptocurrency immediately at the current market price. Let's leave it like that. The second one we have is a limit order. A limit order is an instruction to buy or sell a cryptocurrency at a specific price or better. Let me give this example again. Let's say the price of Bitcoin is 30,000, but you want to buy Bitcoin at 25,000. So you place a limit order stating that once Bitcoin gets to $25,000, automatically buy Bitcoin for me. The current price might be 100,000, it might be 50,000, it might be 30,000, but your limit order states that once Bitcoin gets to 25,000, that price is going to trigger your order, and then the exchange automatically will buy Bitcoin for you at that particular price. There is another thing you should know, that is stop loss order. That's another type of order. I think we talked about that when we were during the last class. Stop loss order is just like a preventive measure to curb or to prevent losing too much of your money. It's just like, let's say you get into a trade at a price of $10, and you aim for that price to get to $15. But at the same time, you don't control the market. You have also prepared for the worst. You are prepared that if this particular price should fall to, let's say, $9 or $8, you have instructed the exchange to automatically close that trade for you. So that is a stop loss order right there. It's a way of preventing losing too much of your money. Stop loss order. So we have bid, we have ask, we have spread, we have order book. These four, they are also concepts or terminologies that you should be familiar with as a crypto trader. So the bid price, I'm talking about bid now. The bid price represents the highest price that a buyer is willing to pay for a particular asset. In the context of cryptocurrency trading, it is the price at which a trader is willing to buy a cryptocurrency. When you place a buy order, your order will be matched with the lowest available sell order on the exchange. That is the ask price. If the bid and ask prices intersect, so that is it. It's just like you are on an exchange now, but you want to buy a particular crypto asset. Your bid price is the highest price that you are willing to buy that particular crypto asset for. It's just like it is relating to ask price also. Okay, let me say the ask price now represents the lowest price that a seller is willing to accept for a particular asset. In cryptocurrency trading, it is the price at which a trader is willing to sell a cryptocurrency. Now, let me explain the two together using something we can relate to. Let's say you go to the market, you want to buy bread. Then you go there, you ask the seller, how much is this bread? Let's say the seller say bread is 500 naira. But then the money you have, the amount you are willing to buy bread for is 450 naira. That is your bid price. But when you ask the person, how much is bread? And the person said, bread is 500 naira. The ask price is 500. But your own bid price is 450. And you see you guys are not agreeing. That particular trade cannot go on. And then let's say based on negotiations and all along, you guys actually agree on 500. That means your bid price 500 and the ask price 500, they intersect. That means that particular order can go on. We have spread. The spread is the difference between the highest bid price and the lowest ask price in the market. It reflects the gap between what buyers are willing to pay and what sellers are asking for. Let me use this scenario of that bread again to explain what spread means. Okay, you went to the market, right? And they are selling bread for 500, but you have 450. You see that difference between the two prices, the 450 and the 500, that 50, that is the spread. That 50 represents the gap between what people are willing to pay and the lowest amount that sellers are willing to accept. Yeah. So that is that about that. The next concept is order book. An order book is a real-time list of all the current buy and sell orders for a particular cryptocurrency or trading pair on an exchange. It displays the bid and ask prices along the corresponding quantities of assets that traders are willing to buy or sell at those prices. The order book provides insight into the supply and demand dynamics of the market and helps traders make informed decisions about when to place orders and at what price. The order book is just like let me use something relatable. It's just like, let's say there is a market for bread. I will use bread again. And then people are buying, people are selling, people are buying, people are selling. You see, as people are buying, people are selling, everything will be recorded on the order book. You can see the recent and even the past trades that have gone on bread. Let's say bread is the particular crypto asset now. So for all the trades that have happened recently on bread, you are going to see the buys, the sells. So you are going to see how much people are actually going for bread and how well people are actually selling bread. So you can use that order book as a way to gauge the supply and demand of bread. So that is that about the what do I call it, concepts in crypto trading. But before we go on, I want us to talk about the importance of exchanges in crypto trading. Importance of exchanges in crypto trading. Why are exchanges important? I mean, why do we need them as traders? Okay, so as a trader, okay, let's say in real life, if you want to buy something or sell something, you go to the market, right? So same thing applies to crypto trading. If you want to buy a particular crypto asset or you want to sell a particular crypto asset, you have to do it on an exchange, either a decentralized exchange or a centralized exchange. In one way or the other, you need a cryptocurrency exchange to perform that buying or selling operation. I don't know if you should talk about centralized and decentralized exchanges again, but I'll just do a bit of a brush off on decentralized and decentralized exchange because we have talked about them before. So a centralized exchange is it's more like you download an application and then you create your account with your email, your phone number, your personal data basically, and then with a password, and then you have access to your crypto assets, and then you can start trading. That is what a centralized exchange is. But for a decentralized exchange, your account is your crypto wallet that you already have on a decentralized wallet. So the decentralized exchange is just there. And to access that decentralized exchange, you have to connect your decentralized wallet, such as MetaMask, Trust Wallet, Token Pocket, etc. So that's that about that. Moving on, let's talk about technical analysis and fundamental analysis in crypto trading. Okay, so we have talked about bid price, ask price, order book. We have talked about spread, talked about all these terminologies, market order, limit orders. But how do you analyze the market as a trader? We have technical analysis and then we have fundamental analysis. The two are very important. As a trader, you need to have an idea of these two types of analysis. So for technical analysis is the use of some analytical tools like moving averages. We have moving averages, the RSI, and some other tools. It is basically opening the chart. Okay, let's say Bitcoin, for example. You open the chart of Bitcoin, you can see the latest movement on Bitcoin represented with candlesticks. And then with this image or representation of the Bitcoin market with candlestick, okay, you can actually look, okay, Bitcoin is approaching this particular level. Bitcoin just left this particular level. Bitcoin is about to do this, about to do that. Bitcoin is moving up. Bitcoin is moving down. You can do all this with technical analysis, and then with technical analysis, you can actually predict. You are not saying you to go this particular way. You are only predicting what will happen on Bitcoin based on what has happened before. So you are using what you see now to predict what is going to happen next. With technical analysis, you can predict what will happen tomorrow, in a week, in a month, even in years, depending on the time frame you are using. But for fundamental analysis, this doesn't involve looking at the chart or drawing some lines or using moving averages at all. The fundamental analysis is more like depending on news and occurrences or events that happen that can affect the price of cryptocurrency assets. I mean, there are some parts. There was a time. Let me give you a case study when there was a crisis with this cryptocurrency exchange FTX, and then so basically the exchange crashed, so to say, and then it triggered a bear market in the cryptocurrency cryptocurrency world. Yeah. So when FTX crashed, it's actually starting from Bitcoin. There was a let me say a downfall on Bitcoin, and then when Bitcoin falls, Bitcoin is the mother of all cryptocurrency, and then when Bitcoin falls, every other crypto just like that they follow suit, and then just like that, the crash of FTX triggered a bear market, and we are still in that bear market today, trying to we are still trying to get out of it. So that is technical analysis and fundamental analysis. As a trader that uses fundamental analysis, seeing that kind of news, you would have known, oh, this is a bad event, or this is a bad thing to happen to the crypto world, and then you will have predicted that this type of thing can trigger a bear market, and then you can place sell orders or short orders. We call them short orders or sell orders. So that is that. Talking about technical analysis and fundamental analysis, let's talk about developing a trading strategy. I mean, as a trader, you need to have your own strategy. This is how I do this. This is how I do that. To create your own strategy, you need to understand how to set your trading goals and set your risk tolerance. This is very important. It's very important. Setting trading goals. I mean, you have to define your objective. You have to clearly outline what you aim to achieve through trading. Goals could include capital growth, generating income, learning about the market, or achieving a specific financial milestone. Another thing under strategy is specific and measurable goals. You have to make your goals specific and measurable. For example, rather than saying that I want to make money, you could say I aim to achieve a 15% annual return on my trading capital. You see, that is very different. You are not just going there to make money. You have a goal. You just want a 15% annual return on your trading capital. Once you get that, your goal is set. Your goal is gotten. You have hit your your goal already. And then there is time horizon. You have to determine the time frame within which you intend to achieve your goals. We have short term within days to weeks. We have medium term within weeks to months, or long term within months to years. Another thing, you have to make your goals realistic and achievable. Ensure your goals are realistic and attainable based on your trading experience, your trading knowledge, and resources. Unrealistic goals can lead to frustration and poor decision making. Another thing you have to be able to do as a crypto trader is you have to make sure your goal is flexible. You have to be open to adjusting your goals as market conditions change or as you gain more experience. Flexibility allows you to adapt to evolving circumstances. Now, talking about risk tolerance. The first point under risk tolerance is assess your financial situation. This point is very, very important. Assess your financial situation. You need to evaluate your financial position, including your savings, your income, your debt, and other financial obligations. Your risk tolerance should align with your financial stability and comfort level. I'll give you an example. Let's say you go on Instagram or you go on Twitter, and then you see these big traders flexing $25,000, $100,000, this $1,000, this 1,000 on trades, and then you are on your own. Your portfolio is worth, let's say, $100, and then you want to do the same thing like those guys are doing. Such a pity, because you are that way. You don't have a strategy. You are just following suit what others are doing. You have to assess your own financial situation. Okay, this $100, how much am I willing to risk? If I lose this particular amount, will I be okay with it? Can I actually survive this crypto trading world if I lose this particular amount? You have to put all this into question when you are setting up your risk tolerance. The second thing is to understand risk versus reward. Recognize that higher potential returns often come with higher risk. I mean, before you can make higher money, you have to risk higher. To make a bigger bread, you have to risk a higher percentage of your wallet holdings. So that is that. Another thing you have to consider personal factors. Your risk tolerance is influenced by factors such as your personality, your emotional resilience, and overall attitude towards risk. And again, you have to ask yourself, are you comfortable with volatility and uncertainty? I mean, at this point, you have to examine yourself as a person. If you are in a situation whereby you are losing money, let's say you deposited $1,000 and then you are on a loss of, let's say, 100, 200, 250, can you actually continue at a sane state of mind? You have to evaluate your emotional strength. How good are you? So you don't just break down or get depressed or stuff like that. Another thing is your risk allocation. Determine what portion of your total capital you are willing to allocate to trading. It is important not to overcommit and risk more than you can afford to lose. I think I'm just going to give a short note on each point, and then the next one is risk reward ratio. You need to establish a risk reward ratio for your trades. For example, you might decide to take only trades where the potential reward is at least 3 times the potential risk. Let's say you are going into a trade and then you are going with, let's say, $10 or $20. If you are someone that has a risk reward ratio of 1:3, if you are going in with $10, you are aiming to earn $30 minimum. If you are going in with $20, you are aiming to earn at least $60 minimum. Another thing is diversification. You have to spread your risk by diversifying your trading portfolio. You need to avoid putting all your capital into a single asset or trade. There is one particular quote or saying I go by: do not put all your eggs in one basket. What do I mean by this? I mean, let's say there is a new crypto that is mooning. There's this particular asset that is going up. Everything is green. And then you pack all the money that you have, the whole of your portfolio, and put it into that particular crypto asset or token or coin. As a trader, you shouldn't be doing that. You need to set a percentage of your portfolio that you are willing or able to put into a particular trade or asset. Another thing is you have to document your strategy. You have to write down your trading goals and risk tolerance in a clear and concise manner. Having a written plan helps you to stay disciplined and focused on your objective, especially during times of market turbulence. Another thing is regular review. You need to periodically review and reassess your trading goals and risk tolerance. As you gain experience and your financial situation changes, you may need to adjust your goals and risk parameters accordingly. Next thing we are going to talk about is importance of research on your journey as a crypto trader. I mean, as a newbie, you are just getting in. You don't know what to do. I mean, you might understand how crypto exchanges work. You might understand what assets are, how to buy, how to this. But you need to make your research to know what assets are actually good to go when you want to do this, when you want to trade or when you want to buy. You need to know, you need to follow the trend. You need to stay informed, because if you don't stay informed, you might just be left out of the trend. Let's say everybody is going right and then you are just going left. You are not informed. You don't know what is going on. So staying informed involves you following educational or big guys in the games on their Twitter, on their you have to join Discord channels. You need to be a good reader also. Yes. So in case you don't read, I think it is time for you to to channel your energy into reading. If you know you want to be a successful reader, you need to read books and keep learning and keep learning. It's just a learning curve. You have to keep learning, keep staying informed. Make sure you continue to do your research just to stay informed so you are not left out. So that's that about that. Another thing under developing a trading strategy is you need to understand how to identify trends and patterns. What do I mean by this? Identifying trends and patterns is a crucial skill for traders in various financial markets. It involves analyzing historical price data to anticipate potential future price movements. The first step under this is you have to choose your market and time frame. You have to decide which financial market you want to trade in. For example, you might want to trade in stocks, you might want to trade in forex, you might want to trade commodities, and then you have to choose a time frame that suits your daily, that suits your trading style. You might be an intraday trader, you might be a daily trader, you might be a weekly trader, depending on you. So you have to pick a particular a time frame that is going to suit that trading style. The second point is you need to collect historical data. You need to obtain historical price data for the asset you are interested in trading. This data typically includes open, high, low, and closing prices for each time period. So with this data, you can, okay, this particular type of price movements have happened before, and then based on those price movements that you have collected and you know about, you can actually develop your strategy and then, anticipate what is going to happen in the future. Number 3 is to understand trend types. You need to familiarize yourself with different types of uptrends, with different types of trends. Sorry. We have the uptrend, we have the downtrend, we have the sideways or range bound. What do I mean by uptrend? In crypto, when you have uptrend, that's when we talk about the bull. Okay, everything is going up, it's going up, it's going up. And then we have the downtrend. That's when we have the bear market. Okay, it's going down, it's going down. And then we have the sideways. It is not going up, it is not going down. It's just like standard around the particular price range. It's just going up a bit. Going down a bit, going up a bit. So you see the chart is just going like it is on a straight line. It is. I think I had a little issue with my internet, but I think I'm back. Yeah. So after that, you need to use technical. Okay. I was talking about using technical analysis tools. You need to employ technical analysis indicators and tools to spot trends and patterns. Some commonly used tools include moving averages, relative strength index. I talked about RSI. So the full meaning is relative strength index. We have the Bollinger Bands. We have patterns also. Patterns like head and shoulders, double tops, double bottoms, flags and pennants, triangles, etc. You see, don't get overwhelmed with these terms I am mentioning or talking about. Like I said, we cannot go too deep into the crypto trading world, but I'll make sure I touch the terminologies and then the basic things you need to know as a trader. So moving on. There's also something called support and resistance levels. We are still under how to identify trends and patterns. So you need to be able to spot support and resistance levels. You need to identify key support. A support is a price level where an asset tends to stop falling. And resistance, on the other hand, is a price level where an asset tends to stop rising. Let me explain it in simple terms. Let's say the price of Bitcoin is 30,000 and then it is going up, it is going up, it is going up. There will be a particular price ahead where the worth of Bitcoin is, it tends to stop and then start falling. And then let's say Bitcoin is going down, there will be a particular price below where the price of Bitcoin tends to stop and start rising. So that is what resistance and support levels means. Other tips you need to know as if you want to identify trends and patterns is volume analysis, multiple time frame analysis, backtesting and validation. You have to stay informed, like I said earlier, and then risk management, and then continuous learning. You see, that last point is very important. Continuous learning, because the market is always evolving. You cannot use one strategy for forever. You have to keep evaluating your strategy. You need to keep amending it and then bending it to the current state of the market, and then you keep going on and on and on. Another thing you need to be able to do is be able to time your entry and exit points. This is also part of how to develop a strategy as a trader. You need to be able to time your entry and exit points. Let's say you have analyzed the Bitcoin charts, the market, and then you have made your decision. Okay, I'm going to buy Bitcoin at a price of 30,000, for example, and then once it is 31,000, I am out. You see, you have timed when you are going in and when you are going out. So you have done your analysis, and then you have planned how you are going to trade and how you are going to get out of the market. So if you are in the trade, you don't really mind what particular price Bitcoin is going, as far as you know that it is going up and it is approaching 31,000. Yes, you know your time in and time out. You already know what you want to do. Okay, I'm going in at 30,000, coming out at 31,000. Once it gets to 31,000, you are out. Deal done. Moving on, we have risk management and psychology. What do I mean by risk management and psychology? You might be wondering, why do I keep talking about risk management? Risk management, manage your risks, percentage per trade, this one, that one. It is important, because as a trader, if you are not able to manage your risk, you are not able to actually section your portfolio. Okay, this particular percentage is going for this is going for this is going for that, and then you just trade anyhow it comes your way. You place the orders, you just enter the market anyhow. You are going to have a problem. So you need to be able to manage your risk, and you're able to be able to manage your psychology. Talking about risk management is crucial for any type of trading, including crypto trading. Given that we have the cryptocurrency market as a volatile nature, effective risk management strategies are even more important to protect your capital. Here is how you can manage your risk as a crypto trader. The first one is set stop loss orders. Like I said, you need to implement stop loss orders on your trades. A stop loss order automatically stops your position or sells your position if the price reaches a certain level, limiting potential losses. Like I said, limiting potential losses. You don't want to lose too much. So that is what a stop loss order is used for. Second tip is to diversify your portfolio. Avoid putting all your capital into a single cryptocurrency. Diversification helps spread risk across different assets and reduces the impact of a single coin's price movement. I'm going to give you a case study. I talked about the crash of FTX earlier. When that happened, there was a particular crypto asset, they call it Luna, and then the price of this particular asset went from ATH to literally zero. So imagine a particular trader that has the whole of his portfolio on that particular crypto asset. You can see the implication of that. His whole portfolio was going to go to zero. So that is why you have to split your portfolio. You can split it 25% each on your crypto asset. You can do 20% or 10% on 10 different crypto assets. So you're actually managing your risk. The risk of just one crypto assets cannot affect your portfolio too much, since you are having 10 different crypto assets. So you have actually diversified. You are not putting your eggs into one basket. I will say that again. Another thing is position sizing. You need to determine how much of your capital you are willing to risk on each trade. A common rule of thumb is to risk only 1 to 2% of your total capital on any single trade. That is that. And then you need to the next point is use leverage wisely. If you are trading on margin, you need to be cautious with leverage. While leverage can amplify your profits, it can also magnify your losses. You need to only use leverage if you fully understand how it works and are comfortable with the associated risks. You know, I said this earlier, you need to keep learning and you need to stay informed. So if you don't know how to use leverage, if you don't know how to implement the pros of leverage, just don't use it. You have to, sit yourself down. You need to research. You need to read about it. Learn the pros and cons, how it works, the risks involved in using leverage before you proceed to putting your money into a trade using leverage. Another thing is risk reward ratio. We talked about that. Another thing is you need to avoid emotional trading. You need to use technical analysis. Another thing, hedging. Another point you need to know is hedging. Consider using hedging strategies such as short selling or options to mitigate potential losses. However, though, these strategies require a solid understanding of their mechanism. Like I said, a solid understanding of their mechanism. So trading is just all about, you need to know how it works before you start. There is nothing like, I am going to learn trading the more I trade. No, there's literally nothing like that. If you want to trade, you have to learn how to trade, and then you have to practice with, let's say, a demo account or with virtual funds before you put your real money into trading. So you need to, how do I say it? It's just like you are going to school. Let me put it that way. It's just like you are going to school, and then you need to graduate first before you start practicing what you learned in school. Something like that. Another thing under risk management and psychology is still position sizing and leverage. We learned about that. And then I think I need to emphasize on the emotional aspects of trading. When we talked about crypto exchanges and crypto wallets, we mentioned FOMO and FUD. FUD. These are emotional aspects of trading. Let's say on Twitter, you log into your Twitter and then you see everybody, every big page, every influencer, almost everybody you follow, the whole of your feed is filled with buy this particular token, buy this particular token. It is going to moon, it is going to this, it is going to that. And then because you don't want to miss out, you want to be part of the roller coaster to making money, then you just go in there and put on your money on that particular token they are talking about. No, that's very, very wrong. Because if you are doing that, you are not conducting your own analysis. You are not making your own research about that particular asset or crypto token. You are not doing your own research. We call it DYOR, DYOR in crypto. You are not doing your own research. You are just following the masses based on what everybody is going for. So you are going for it also. That is very bad. Another one is FUD. FUD means fear, uncertainty, and doubt. Let's say you are just in the crypto say you are scared, you don't know what to do, you are scared of losing your money, you are scared of going back to zero, or you are uncertain. You don't know, should I actually invest here? Should I do this? Should I do that? Or you are doubtful. Maybe you have made your analysis, but then you don't really believe your analysis you did is okay enough, and then you are doubting. You're like, will it work out for me? Will it do this for me? Will it do this for me? You are already getting emotional. You see, as a crypto trader, you need to be able to maintain a blank state of mind. I mean, if you are going into the crypto market, you are not really your personal self again. Your emotional part, you need to press it down, and then your decisions should be based on analysis, should be based on risk management, should be based on technical analysis, your fundamental analysis, risk management, research. All these things, you have to put them in place, not your emotions. I want to make 10,000 tomorrow. I want to do this tomorrow. Oh, I'm losing. I need to go out and do this. No. You don't complain. You act based on your research, and then you need to act on your research and your risk management. Thank you. The next point we are talking about is dealing with loss and maintaining discipline. How do you deal with loss and maintain discipline as a trader? I mean, losses are inevitable. You don't own the market. You are bound to lose at one point or the other. You are bound to lose. You cannot escape it. In fact, losses are part of your story as a crypto trader, because you learn from them. When you lose, you learn from them. Okay, you get to know your mistakes. You know where you need to fix up, where you need to work on, what you need to research about. So how to deal with loss and maintain discipline. The first thing is you have to accept loss as part of trading. I can hear somebody's mic. I don't know who it is, but I can hear somebody's mic making a bit of noise. All right. So you need to accept losses as part of trading. Understand that losses are an inevitable part of trading. Even the most experienced traders, they face losing trades. You need to treat losses as learning opportunities and focus on the long-term goal of consistent profitability. I said earlier, you need to treat losses like you are learning your lessons. You are getting that backlash so you can learn, and then next time when you are taking that particular type of trade, you know what you need to look out for, and then you know where you can actually lose money, and then you know the right thing to do so you don't lose your money the next time. The second step is to set realistic expectations. You need to avoid setting unrealistic profit goals. See, having overly high expectations can lead to disappointment and emotional decision making. You need to set achievable goals based on your trading strategy and risk tolerance. You see, these points, they keep repeating: your trading strategy and risk tolerance. So you need to set your expectations or goals based on your strategy and risk tolerance. And then the third point is to stick to your trading plan. This is still talking about strategy. You need to stick to your trading plan. You need to develop a well-defined trading plan that outlines your entry and exit criteria, your risk management rules, and overall strategy. You see, when faced with losses, remind yourself of your plan and stick to it, even if emotions tempt you to deviate. I mean, trying to shut down your emotions is really taxing. So you need to have a trading plan that you are going to stick to. Let's say when you wake up in a day, I'm going to take just 5 trades. 5 trades, risking just 2% of my portfolio. 5 trades. After 5 trades, I am done. No matter what happens after or happens before. 5 trades, risking 2% of my portfolio, I am done. You have already said that to yourself. You are written it down. That's your plan. So whatever happens, you are sticking to that plan. 5 trades, risking 2% only. That is it. And another thing, you need to practice patience. You see, crypto markets can be highly volatile and prices can swing dramatically. Practice patience and avoid making impulsive decisions based on short-term price movements. This, in one way or the other, still has a relationship with FOMO and FUD, and then it still deals with your strategy also. You need to practice patience. Sometimes you just need to sit back and then let the price play. You need to watch it, and then you need to detect or observe some patterns or some moves, so that you can actually, okay, this is what is happening, this is what has happened before, this is what is happening now, and then based on that you can actually say, okay, I am anticipating, that is you predicting now, I am anticipating that so is going to happen in the future. That is part of you practicing patience and staying with your strategy. Another thing is to use stop loss orders. You need to review and learn on your strategy. You need to review your strategy. Is there anywhere my strategy is failing? Is there anything I need to fix up in my strategy? You need to review and learn and learn. And another thing is you need to limit screen time. This one is very important, guys. You need to limit screen time. You need to constantly monitoring price movements can lead to emotional reactions. You need to limit your screen time and avoid obsessively checking prices. This can help you make more rational decisions. I mean, you will see some traders, they are always in their trust wallet, they are always on Binance, they are always on KuCoin, they are always on the exchanges, they are checking the latest price, they are always there, always there. No, you don't do that, because you're actually checking results of a compound effect of trades that have happened, instead of you to be at the back, instead of you to just sit back and then make your own plan so that you can get into the own market. You are busy checking the prices, and then you are getting emotional, and then through that you can actually place emotional trades. No, you don't do that. What you want to do is, no matter what the prices are, no matter the movement that is going on, you will always run your strategy check on that particular crypto asset before you place an order. Another thing is you have to avoid revenge trading. Oh, the market is not your enemy. The market is not your opponent. So you need to avoid revenge trading. If you get into a trade and then you lose, you don't because of that say, I'm going to risk the rest of my portfolio into this particular trade, and then I'm going to come back. You see, this is not Champions League football. This is not where you go to and then you want to revenge, you want to come back because you lost, you want to make everything back in a night. No. If you lose, take that as an opportunity to learn. Go back to your trading plan, check your strategy again, so that you can place your next order, or your next order, you can place it right. You want to avoid revenge trading. There is nothing like revenge in trading. If you are trying to revenge, I'm sorry, your loss is just getting started. And then you need to focus on process over outcome. Instead of fixating on individual trade outcomes, you need to focus on executing your trading plan consistently. Over time, following a sound process should lead to positive results. You need to zero your mind off, okay, how much is going to come out of these trades? What is going to happen in this trade? You need to focus on what is going to happen after executing my plan for that particular day. Zero your mind from what is going to happen after this particular trade. What is going to happen after I place this order? No, don't do that. You need to focus on what is going to happen at the end of today, at the end of this week, at the end of this trading month, at the end of this trading year. So you are focusing on the long term results. You are believing in the process that, okay, at the end of this trading month or year, you are going to achieve your goal. So that is that. You need to focus on process over outcome. Another thing is you need to practice mindfulness and stress reduction. Yes, we know we want to make money. We want to you want to place good trades. You want to do this, you want to do that, but at the same time, don't stress yourself. Because if you stress yourself, you get tired, you don't want to analyze, you don't want to strategize, you just want to do it as it comes. You are stressed, just let me do it. You are just like, no. If you are getting tired, get off the internet, turn off your data, go outside, go and eat, go and touch grass, just go and spend time with your loved ones, and then just leave the screen for some time get your energy back and come back, and then you can continue. Another thing, you need to seek support and education. Thank God you guys are here. You guys are in CHAP Academy. Thank God for that. You guys are seeking support. You are seeking education. So yes, you are already doing that part. And then the last one is you need to take breaks. This one is hand in hand working is practicing mindfulness and stress reduction. You need to take breaks. When you're on your screen for 10 hours, 12 hours a day, come on, you are stressing yourself. At the end of the time, you are going to break down. So you need to take breaks. You just say, okay, after 5 hours on the screen on your laptop, you just close it, and then you just go out, and you need to have an hobby. You can just go out and read. You can just sit down, you can read, you can just go out in your yard and then just let fresh air blow you. That is part of taking breaks. So that is that about that. We have talked much about crypto trading, but I have some extras for you. I think these points you need to, these are part of the things you need to know as a crypto trader. They are important to you. So the first one is security practices for traders. If you are as a trader, you are not protecting your funds against losses. You are also protecting them against hacks, against cyber, different types of. There are multiple ways you can lose your funds apart from losing them to trades. They could hack your wallet. They could use phishing sites. They could use this and that. So let's get into it. What are the security practices for traders? The first one is use strong and unique passwords. This is for those of you that are going to be using centralized exchanges. On your Binance, on your KuCoin, on your whatever centralized exchanges, you need to use strong and unique passwords. Passwords that you know, okay, only I could possibly guess or know this password. So that is one. The second one is to enable two-factor authentication. We call it 2FA. Enable 2FA on all your crypto accounts. This adds an extra layer of security by requiring a second form of verification, such as a code from your phone, in addition to your unique password. So they work hand in hand. The third one is to use hardware wallets. We talked about ledger wallets when we were talking about cryptocurrency wallets and exchanges. So a ledger wallet is an hardware wallet. You need to make use of that if you actually want to be 100% secure with your funds. The fourth one is to keep your software up to date. You need to ensure that your operating system, your antivirus, and other security programs are up to date. Regular updates help protect against vulnerabilities that hackers may exploit. Another thing is you have to be cautious of phishing. You need to be vigilant against phishing attempts. Never click on suspicious links or provide your private information to unknown sources. You see, the crypto trading space is very wild. We have people that are actively cloning sites, actively cloning exchanges, their websites, their dexes, and then they just want you to connect to these sites that look exactly how your normal exchanges look like. They are not exchanges, they are websites that could potentially drain your wallet. So you need to be very cautious. You just need to be very cautious of these sites where you connect your wallet, where you connect your and where you log in your exchange accounts. That's very important. You need to take note of that. And then you need to make sure you have a secure internet connection. You see, trade and access your crypto accounts only over secure and trusted connections. Avoid using public Wi-Fi networks for sensitive activities. Avoid using public Wi-Fi networks. This one goes for those of you that just connect your phone to any hotspot you see around. Be careful. Another one is you need to secure your email accounts. On all your email accounts, the ones you use for your centralized exchanges, even though you have a password for your centralized exchange account, you need to have a very secure email address, or let's say Gmail, Google address now. you need to make sure you have a unique address also. Best bet, you need to have a two-factor authentication on your email address. Other points are you need to back up your wallet. You need to avoid keeping large amounts on exchanges. It will be very bad if you put the whole of your portfolio on a particular centralized exchange and then tomorrow that exchange just crashes. I'm not saying any exchange is going to crash. It doesn't happen so often. It's not something that happens every time. But at the same time, to stay on the safer side, don't keep large amounts on centralized exchanges. Another thing is use cold storage. Hello, please mute your mic, please. Thank you. Another thing is you need to educate yourself. This point keeps repeating itself. Educate yourself. Stay informed. Keep researching. Educate yourself. Another one is to avoid sharing private information. Do not share your private keys, your seed phrase, or other sensitive information with anyone. Keep this information confidential. Only you should know about them. And then you should consider using VPNs. If you are trading on public networks, consider using a virtual private network VPN to encrypt your internet connection and enhance your privacy. Another one is to test small transactions. When you are using a new wallet or a new platform, start with small transactions to ensure everything works as expected before moving larger amounts. Talking about that, we need to talk about some case study of successful and unsuccessful trades. You see, in the past, it has happened before. A successful trade study, this one. You see, buying Ethereum, ETH, before a bull run. Market context. In the early 2020, Ethereum was trading at relatively low levels compared to its previous all-time high. The broader cryptocurrency market was showing signs of recovery from the bear market of 2018 to 2019. So, a trader recognized the potential for Ethereum's price to rebound based on improving market sentiment, upcoming network upgrade, and increased adoption of decentralized finance DeFi applications. So, the trader allocated sorry, there was a bit of noise. I had to go mute. So, as an outcome of this particular trade made by that trader, as anticipated, Ethereum's price began to rise steadily due to the factors the trader identified. The trader held onto the position and eventually sold a portion of their holdings during a significant price spike, locking in substantial profits. So what is the key lesson from this case study now? You see, through research and then understanding market trends and capitalizing on improving fundamentals, this particular trader was able to predict that, there is a very high possibility that the price of Ethereum was going to spike. So that particular trader went in on a buy order or a long order on Ethereum, and then that trader made a very good profit. So that is just a case study to show you how good research, how staying informed, and then how strategizing can help you on the long run as a trader. So I guess I'm done here. I've talked about crypto trading. I think Mr. Sharp should address us now, and then we will have questions after that. Thank you.
Okay, thank you very much, Mr. Timothy. Um, this class, it's so detailed to the extent that I got to know some stuff I don't know about. Because personally, like I always say, I don't really trade, but I believe I have a knowledge of trading, but I don't do it. But with today's session, I'm able to learn a lot of things. Yeah. So it's time for questions now. This is 7:10. So questions drop within the time frame 7:10 to 7:15 will be answered. So you just have 5 minutes to ask your questions, and in exactly 7:15, Mr. Timilen will start uh, answering your questions. And also, while you guys prepare your questions, during yesterday's discussion, there was somebody that tried to say something about his experience in e-commerce. I tried to reconnect with the person, but the person didn't responded back. So if you are the person during yesterday's discussion that you said something about your experience with e-commerce, kindly identify yourself with the group now. Thanks. We'll be back 7:15. Okay, it's time already. So Mr. Timlen, you can start attending to the questions.
All right. Let me scroll back to 7:10 and see. Okay. So the first question is tokens that are yet to be listed, is it safe to purchase? I'm not going to, is it safe to purchase? It could be safe, it might not be safe. So that is why I told you, you need to always conduct your own research. That particular token that is not listed, you need to conduct your own research about who they are, their tokenomics, what use case for that particular token, and then you can see based on your own strategy, is that particular token a good buy for you or a good investment for you. So you need to put all that into consideration before buying or purchasing such token that is not listed yet. The second question from Savior says, would you recommend copy trading for beginners? You see, the idea of copy trading is not bad or wrong, but if you want to involve yourself in copy trading, you need to make sure that the person you are trying to copy is ahead of you in the as a particular type of trader. If you want to copy someone's trade, you need to evaluate the risks that such person take into place when they are taking their trades. You need to understand their risks, where they are, I mean their status as a trader, and then their portfolio size. Compare them to your own self before you know you can actually copy their trades. Because a substantial loss on a trade for that particular trade that you are trying to copy. They might just be minute, but to you, that particular loss might be something too big for you to handle. So if you want to involve yourself in copy trade, you need to make sure the person you are trying to copy is actually not going to send you to your village. Thank you. The third question I can see is, what is the difference between forex trading and regular trading on exchange? Okay, if I get your question, you mean what is the difference between forex trading and crypto trading, right? You see, forex trading, the full meaning of forex is foreign exchange. So as a forex trader, you are trading real money in the real sense. You are trading US dollar, you are trading euros, you are trading pounds, you are trading Australian dollar, Canadian dollar, so and so and so and so. So you are trading currencies versus currencies. But for crypto trading, you are trading crypto assets for another crypto asset, or you are trading crypto assets for fiat currency. So that is the difference between forex trading and crypto trading. Question from the next person says, does demo trading actually reflect what is happening in the real market? Yes, if you are trading on a demo account, you are trading what is happening on the real market, but you are using virtual assets or virtual funds or virtual cryptocurrency. So the chart you are going to see, the market you are going to see is the same as what is happening in the real market, but all your trades and everything, it is virtual, it is not real money. You understand? Another question is from Juliet, says, please, is crypto trading same as trading gift cards? No, now. I mean, you already answered your questions. You said crypto trading and then you said trading gift cards. So crypto trading is trading of crypto assets, and trading gift card is trading of gift cards for exchanging it for whatever assets you want in return. So that's the difference. Question from Abiola says, expatiate more on how to secure our accounts. Okay. I think I'm just going to run through the tips for you to secure your accounts again. The first one is for you to use strong, unique passwords. The second one, enable two-factor authentication, 2FA. This one deals with your emails, with your exchange logins, with your, yes, those two in common, your emails and then your exchanges application. You need to ensure two-factor authentication. And then you need use hardware wallets. If you're able to afford one, you can use hardware wallets. That is the ledger wallets, like we talked about when we were talking about crypto exchange and wallets. Another thing is to keep your software up to date. You see your MetaMask, your Trust Wallet, your Binance, your whatever exchange you are using, you need to keep them updated. Always update these apps so you are on the latest software. Another one is to be cautious of phishing links and sites. Another thing is to make sure you are using secure internet connections. You don't just connect to hotspots anywhere you see them and then start doing sensitive things on your phone. No, you need to be cautious of that. Another one is to secure your email account using two-factor authentication and using unique passwords. Another one is to back up your wallets, your seed phrase and your private key. You need to make sure they are confidential. You are the only one that has access to them, because if you lose this or they get to another person, they might either tamper with your assets or you are not able to recover your assets. Another one is you need to avoid keeping large amounts on exchanges. The next one is to diversify your holdings. You don't put your eggs in one basket, like I said earlier. Another thing is to educate yourself and avoid sharing personal information with strangers, or if you are going to share your personal, in fact, don't share your personal information with anybody. So that is about how to secure your accounts. Abiola again is asking, is there any real manual on how to accurately predict chances of price slump. Like I said earlier, you see, crypto trading is very wide and we cannot cover everything within 2 hours, or how long is this class going to take? You see, if you want to actually learn how to predict chances of price slump, or you want to predict how the market moves, that is another topic on its own. It will require, I don't know, it's going to require you learning that separately. That is a topic on its own that is going to take maybe a whole class on its own, or that is just a topic on its own. Let me put it like that. Another one is my question is, via spot trading, where can one get good FA concerning a particular coin? What does the Bura mean? What do you mean by FA? Do you mean fundamental? I guess you mean fundamental analysis for spot trading. I don't really understand your question, Deborah Godwin. I don't understand your question. I don't understand your questions. Yeah. Kolawole Emmanuel is asking, what causes the fluctuation of prices and when is the best time to trade? Also, does the green, blue, green, and red colors, what does the green, blue, green, and red colors mean in trading? This is 3 questions in one. Okay, what causes the fluctuation of prices? You see the prices of those fluctuations you see in prices, it is a result of different factors put in place. Supply and demand, news, use cases. We have numerous things that come into place, and then the compound effect of these factors, they are what cause the fluctuation of prices. What causes the fluctuation of prices is more than buying and selling. No, there are other things that happen in the back end that causes the fluctuation of prices. Your second question is, when is the best time to trade? The best time to trade is the time to trade that aligns with your trading strategy. Simply put, like I said, there are the day traders, swing traders, hodlers, arbitrage traders. If you are one particular type of trader, you need to make sure you know what time is the best for you to trade. If you are a day trader, there is nothing you are looking for on the time frame for a swing trader. If you are a arbitrage trader, you don't have anything doing with the strategy of a swing trader. So it's just like that. For each particular type of trading or trader, there is a particular time frame for you to trade. And then, what does the green, blue, green, and red colors mean in trading? Like I said, all those things you see are candlestick. You see all those green, blue, red, blue, they are candlesticks. They are representing the latest movements or what has happened in the past or what is happening right now. Let me give you a little explanation. You see, when you see green, most times or on default, when you see green means price is actually going up. When you see red, it means price is actually going down. So when you hear stuff like the market is green, that means okay, the price is going up. Or when you hear stuff like the market is red, that means the market is going down. Someone has been trying to, I don't know about that. Tell Mr. Sharp. More questions. Please, if anyone is trying to scam you on WhatsApp, DM me, you need to make sure that Sharp Academy, Sharp Keys on its own, and other people that work with Sharp, we are not going to message you privately first. Whatever problem you have, please make sure you ask them on the group or the community. Define Sefi with Defi. ask your questions there, and then we are going to reach out to you. Please, if anybody DMs you, like Juliet did, please just block and move on. Okay, I think I have answered all the questions that were asked. Mr. Sharp, you can continue from here.
Okay. Thank you very much, Mr. Timileyin. Thanks a lot for this. We really appreciate you for giving us a share of your knowledge. So, before I based on what you just learned today, everybody, do you think you can trade now? Do you think you can decide on what to do on your own when it comes to trading? Let me know. I want to see people with balls. Okay. So, Mr. Timileyin touched almost everything you need to know. Almost everything you need to know about trading. The only thing is that there's no practical. So you are going to have to do that. Then you are going to have to do that yourself with demo accounts, as you mentioned. So let me see. I'm trying to do something here. Okay. The plan was to give the first person to fill the form $5. So let me check what the first person is. So I'm checking. That should be Mr. Isaiah. Mr. Isaiah. So let me tell you. Okay. Okay. Nice. So, as I was saying, Mr. Timileyin has taught almost all the aspects you need to know about trading, and the only thing we are only lacking right now is just practicals. So, for you to go full into trading, like you said, it's not very easy. I have a lot of friends that are into trade, and yeah, a lot of them make money, and for the time they lose, it's not always easy. The market always send them back to their village. They have to find their own way and come back. Maybe they will go back to the city with keke napep. But just know, once the market sends you back to village like this, your own, your own. So some of the things I remember Mr. Timileyin mentioned was he explained the type of trading. He said day trading. So that one is just a trade that takes place within a day. That's understandable. Swing trade, that one is for several days, I believe. So have I ever done anything related to swing trade before? No. But day trade, yes. Yes. And the day trade I did was this asset, was SRI. Yeah, that's SRI airdrop. So what I did then was that I actually owed some of my SRI airdrop then. So I studied the pattern of the chart. I'm not really good though, but I just studied. I can't remember the exact numbers, but I already know that if this thing should reach this point, it's going to dip, meaning the price is going to go down. So at that time when it dipped, was it when it dipped or okay, at that time when it pumped, I think she was trading about $1.3 then or 1.4. So I sold at $1.4. Then it fell back to $1.1. I bought back again. When it pumped to 1.3 again, I bought again. Okay, I sold when it pumped again. I sold. Then when it did, I think I did that about 5 to 10 times, and at the end of the trade, I was able to get about $200 to $300 because I was buying with almost all the bags of the airdrop. So I was getting about $50, $100, $50, $100 per. We call it. There's a name. There's a name we call it. I've forgotten. Is it? Oh God. There's a name we call it when you do that kind of thing. Is it flipping? I can't remember.
Something like buyback.
Yeah, there's a term we use. I can't remember. I think it's flipping. Okay, thank you, scalping. Thank you. So yeah, exactly. That's what I was trying to remember. Scalping. So I was just scalping the rewards. I was scalping the rewards at the end of the whole this thing before she went down the drain. I was able to get about $200 to $300. So yeah, me too. I'm a trader. Come to me for advice. But if my advice send you to village, I'm not involved. So thank you once again, Mr. Timileyin, for today's session. We are very, 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 very grateful. Also, the announcement I made earlier regarding somebody who mentioned yesterday that he knows about e-commerce business, like e-commerce platforms. Please, if you can hear me, I would appreciate if you can identify yourself in the chat, or you can DM me later. Please and please. So I believe at the initial stage of the class, like some people were complaining Mr. Timileyin was fast, but I believe those parts you didn't hear or you didn't understand, you already asked them as a question, right? So either ways, the class is recorded, so you can just get to see it at the weekend. So yeah, I've already dropped the attendance form. Let me check how many people. 38 responses. Okay, that's nice. I'm going to close the form in the next 30 seconds. Okay, I'll wait for Toyo to fill the form, then I'll close it. So let me know when you are done filling the form. Do I have something I want to discuss? I think I'm forgetting a very important announcement I want to make. Oh God. Yeah, I wanted to thank you guys for yesterday too. For those that helped me to test the e-commerce platform I shared yesterday. Thanks a lot. The corrections is being worked on. And next week everything should be balanced. So thanks a lot. Mr. Tomato 200. Okay, let me close the form. Yep. Okay, tomorrow, I'm trying to get somebody in tomorrow, but the person is very, very, very shy. It's not that he's going to show his face. I know he's very, very experienced too, but I'm still urging him to present tomorrow, almost a month now. He's still, I don't know why he's scared. I don't know, but I'm still going to try to convince him tomorrow because he's very, very, very experienced and he's somebody I know that has made millions from trading. So you guys should pray. You guys should pray he overcomes the fear. We are not going to bite him. So, okay. See you guys tomorrow. The two people that won today's giveaway, just tag me with your wallet address. Thank you very much and have a nice night.